Subscribe to our YouTube channel and press the bell icon to get the latest updates.
Hello subscribers, welcome to the Fast Profits Daily. In this video, I'll be highlighting one sector which is a sign of cautious, I would say the red flag to the sector, which is the IT sector. If you remember at the start of the year, on 8th Feb of 2022, I have done a video that is this a beginning of an end for IT sector? When index was trending somewhere around 34,500 and we saw downwards the fall by a huge margin towards 26,000, 27,000 levels onto the downside. On 19th July, I again said that the short-term bottom is this place and it was specially meant for the traders. And I highlighted that 10-12% bounce can be on cards, and I've specifically highlighted it is just a bounce of 10-12% where the traders can gain a profit of from the momentum, and we saw a rally of around 11%. And since then, the index is trending bearish. Now, one chart, why I believe it as a subscribers, you should keep a watch on, and it's my duty to highlight the red flag over here is the Nifty IT index to Nifty ratio chart. Let's look at the chart over here on your screen. So this is Nifty IT to Nifty 50 ratio chart over here, and if you look at the orange line over here, it is 200 weekly exponential moving average. Now, a 200 weekly exponential moving average, the index, the ratio is trending below the long-term moving average now. The blue lines over here, it may act as a support, but I am still not convinced over here that because the long-term trend line has been, long-term moving average has been breached over here. So in case we see the ratio falling below 1.50 over here, it's currently trending around 1.58, 1.59. If we see this ratio falling below 1.5, I think the IT index is in danger for next probably 6 months to 1 year. And we may see a sell on rise strategy onto the IT index. If I just look at the second chart, which is the IT index chart, now look at the screen over here, the blue line again. The previous swing low may act as a support over here, but once that is taken out, I think the scenario will be much onto the bearish side. Now look at the green line over here, the 50 weekly exponential moving average. The price is rejected over there, and now the momentum is onto the downside. So I guess yes, the structure doesn't seem a bullish scenario for the IT index. And if I look at the third chart, the point and figure chart over here, if you look at the blue lines, these are the 45-degree trend lines, and prices are on the verge of giving the breakdown of you can say the triple column or the double bottom sell over here as per the point and figure chart. So once I think 26,000 is taken out both on the bar chart or as well as the point and figure chart, I believe we are heading much lower. And if you look at the bottom, the 45-degree trend line, it is placed somewhere around 19,000 levels, 19,700, so precisely 20,000 levels. So another 20% fall can be on cards for IT index. Again, now remember that IT index holds a huge weightage onto the Nifty, which may put pressure, but on the contrary, most of the sectors are outperforming, like banks are outperforming, energy is coming back very strongly, autos are outperforming. So some of the weightage is small and big weightage may hold onto the Nifty onto the higher side, but looking at the IT index, I think it's a sign of red flag. So keep a watch on this ratio chart. 1.5 onto the ratio chart, 26,000 on the IT index. Once that is taken out, I think we may see a much downside levels onto the, and as an investor, I would definitely avoid IT index to be invested, though they are a benchmark or the blue chips over here, like the likes of Infosys, TCS, Tech Mahindra, Wipro, HCL Tech. But looking at the index, I may slightly avoid looking as an investment into the IT space as of now. So 26,000 holds the key level, the decisive level, I would say, for the further course of action onto the IT index. So stay cautious over here, and in case the things are turning onto the bullish side, I will wait for 28,500 to be taken out on a weekly closing basis to confirm that these levels have been holding quite strong and the things are turning out on the bullish side. So 28,500, 26,000 range, either side break will be a decisive for the bulls and bears. Signing off, Brijesh Bhatia.